Welcome back, everyone. It was a range-bound day that ended weaker in markets. Let's get right into it and take a quick look at how this market behaved today and what it may imply for tomorrow. So I'm going to take you over to my instance of wealth charts over here, and we're going to look very closely at the S&P 500 and the NASDAQ. So we know that the NASDAQ was the star of the market today. The S&P 500, as you may have heard from me on videos just like these, it's coming up to an area that's important. It's been trying to chip away at that resistance structure, but it didn't quite make it up there today and did close on a bearish note. Now, if I pull this chart back, you may remember that that resistance structure that we're looking at just a moment ago, that 414 area, is an area that marks the halfway back from the drop in Jan 2022, the highs over here, to the lows in October. So that halfway marker has not been cleared, closed above, and we have not diverged high enough above it to actually run. This, however, is still the most elongated, most days of attempting to do so. Now, in today's market, volumes were light, sideways range was where we were at, and the real downer move did happen more into the end of the day in the last hour to hour and a half. Now, as you look at the close of the candle, against the pivot lines running through the screen, we close below the center of the pivot lines. So that's bearish. But we've seen this movie before, haven't we? We've seen buying tail, and we ate through the buying tail from yesterday's candle. Now, does this imply a continuation down? Now, objective technical signals will say very likely continuation down. But we know that the markets had many negative things thrown at it, and even in times of peril, from late April, as you can see over here, we managed to come back up. Well, we've been in this range. You kind of draw a rectangle around here, and we've been in this range really since the beginning of April, end of March, and we have not broken down and unraveled down to the lows, where you can define those lows with these two candles, and of course the big bullish push up. And we have not broken out and sustained for more than a day or two. And in fact, there was a bearish reversal on this candle. So now, the odds to come down to the bottom of the range are higher than not, especially with a bearish close. But can we define that technically? And do we have a toolkit that supports we can actually come down and hold the bottom of the range? Or does the toolkit actually say this is going to play out the same way that we saw the last handful of days with bullish reversals? Let's go take a look at that through the lens of an indicator that I've developed called the Triple S. You're looking at the Triple S scanner on the left-hand side of the screen on multiple time frames. Price is price, but the signal on each time frame has a durability and duration attached to it. The daily tends to look out a week to two, sometimes more. The 4 hour tends to look out 3 to 5 days, and the 1 hour tends to look out 3 to 6 hours. It can, of course, diverge from those numbers, but those are the ballparks. Now, we've got the SPY in here, and you've got really two things in the scanner: the state that the SPY is in, and the trend of the move according to the Triple S indicator. So the trend is up on all time frames. Good. The state, however, on the 4 hour and the 1 hour has turned bearish. And we know that we've been in a sideways range. We just saw that on the daily chart. So I'm not going to labor the daily chart. We've got lots of mixed action in the range. Near the top of the range, sell signal. We didn't quite get to the top of the range, but we were left with a sell signal, down triangle. And the subchart indicator, which is the most important to me, did see the red line, the Triple S line, below the center of the channel. That's not good, especially if we've then got it nested with the 4 hour and the 1 hour in that state, which is the case. So what we've got on the 4 hour is, again, a negative state. We didn't see a move that closed the indicator below the lime green line there and put it in the bottom quadrant, but the 1 hour chart did. And both are left with down triangles. So at this stage, I can say, yep, technicals objectively support we're likely to move down. But we've seen this movie before, and what we can do is use the closest in time frame to help with how much down and is it likely to bounce. The fact that the 1 hour channel is sloping up, positive. From where we are right now on the indicator, we can go back in time and look at the size of drops that have happened from that moment in time. And we can fairly easily say A drop that was as significant as the one back here early May could take the SPY from effectively, where it ended up dropping in the median area all the way down to here, which is about a $5 move. So is that something that has potential? Yes. Okay, now my expectation, however, is we've been down here before, and unless the catalyst tomorrow morning with Eurozone inflation comes out significantly bearish, it would probably be something that the market could withstand. Now, again, I'm going to be super clear with you on levels here. If we do come down tomorrow morning pre-market and we're trading below 409, that's not bullish and conforms with the downtrend signals from today. That does open the door for us to come back down in towards this area, and then evaluation would be required. As of right now, the bearish signal is not bearish enough to say breakdown, but there's event risk tomorrow that I wanted to inform you of. Eurozone inflation comes out. If it's hotter than expected, very likely the euro would sell down, believe it or not, because they didn't take a 50 basis point rate hike the last time they had a chance to. They didn't do it because they're afraid of hurting their financial system, which we've heard a lot about here in North America. So the idea would be they would be forced to take a bigger rate hike if the inflation data is hotter, and that would then cause a problem with growth. Euro would go down, dollar would go up, and a risk-off sentiment could emerge. In the case that the SPY is below 409, and we've got a stronger dollar, weaker euro in the pre-market, we're probably in that risk-off outcome. Below the bottom of the range, the signal can remain intact. But when we're in a range and the triple S indicator has clusters of buys and sells, I am very well open-minded to look for the level and the tool to give me guidance on where we're going. Now tomorrow, I'm going to be doing a session with you that in a handful of minutes can help you identify market risk and opportunities for trades that can move faster than the market and outperform, whether it be bullish or bearish. So I'm going to introduce you to, more formally, the different time frames on the triple S scanner, how the tool works along with the Champion Trend Pack and the member exclusive indicators on wealth charts, and give you a process that, once learned, can take a handful of minutes to get higher probability trades in front of us, and then, of course, management execution of entry, re-entry, additions, and exits will all be discussed. And I'm looking very much forward to being there with you tomorrow for a very special session that you haven't seen me do before in this format. It starts at 10 a.m. Eastern Time tomorrow, Wednesday, May the 17th. It will run for an hour and a half, or between an hour to hour and a half. So it'll be a very clean, tight session that gives you the insights, strategies, and tools that I use, where I've come in to the beginning of this week with swing trades from last week, closed them on Monday with a good result. I'll show you how I use the tool to identify that, and the process, more importantly, that is repeatable. The tool and tactics and strategies with all of the incredible tools that Rob has put into wealth charts is a game changer for me, and I'm looking very much forward to sharing my insights and knowledge with you. Go to becomeabettertrader.com/yes to register for the session. Click the link in the email. It's right there for you. Looking very much forward to seeing you there at 10 a.m. Eastern Time. It's going to be a power-packed session, market insight, trading tactics and strategies, and much more. Have a great rest of your day, and thank you for watching.